What is up, YouTube? Matt McKeever here. And so today I figured let's chat about how to invest, or maybe how to prepare to invest if you think the market's maybe going to change. Maybe you expect it to drop in value. Maybe you think we're going to see a pullback, a correction. I know there's a lot of people with a lot of different theories, a lot of rumors out there. And this seems to be a question I'm regularly getting these days. So I figured let's sit down and chat about it. If you guys have any questions, feel free to jump in that chat. As always, I'm more than happy to answer your questions. But one of the reasons I suspect I've been getting this question a lot more recently than in the past is if you guys have been following me on Instagram, I've kind of mentioned I've been selling a lot of my real estate portfolio the last year and a half, almost 2 years now, really. And so I figured in today's video, let's chat about why I'm selling a significant portion of my portfolio and why probably by the end of this year, I may not really hold much real estate outside of the Citadel and a handful of properties up there. In addition, we'll also explore how I'd maybe prepare myself if I was expecting a correction to occur. And again, I'm not saying I am expecting a correction. And spoiler alert, it turns out the reason I'm selling my real estate isn't in anticipation of a correction. I'm definitely not part of the Illuminati, so no one gives me the inside track in regards to when markets are going to correct. So again, my crystal ball is just as cloudy as your crystal ball. No one can really predict what's going to happen in the property market, what's going to happen in the real estate market. However, based upon the prices that we currently see, I can understand why a lot of would-be aspiring investors or new investors feel compelled to want to sit on the sidelines during what feels like a lot of craziness. If you guys haven't been paying attention, you look at just about any real estate market in Ontario, and for the most part, even across Canada over the last year, and odds are you're looking at something like a 20, 25, 30% increase in price compared to where it would have been about 12, 13, 14 months ago. Now, that is definitely an unusual level of appreciation in real estate, particularly when we're not talking about forced appreciation. It's not like people have been investing a lot of extra money, going to a lot of extra lengths or efforts in order to increase the value of the property. This seems to just be naturally occurring in our market due to the level of supply and demand related to real estate. So before we get into how I'd maybe position myself if I was a newer investor or maybe an experienced investor expecting a correction, again, no guarantees there's a correction here. Right now, I don't know. It could be a coin toss. Maybe we continue to see inflation run rampant. Maybe that inflation continues to spill over into real assets, and we continue to see real estate prices go up, and up. Otherwise, maybe we see a major correction. Maybe we see a pullback. Maybe we just see a softening of the market. And what's interesting is we're just coming off of the summer. And so in Canada, normally the summer is a slower time in the real estate market because Canadians want to go out and enjoy the summer. And so oftentimes when we get back into the fall, that's when we start to see demand increase again before we start to get into like the later fall months and then the early winter. Winter is usually, the worst time of the year to be selling a property traditionally in Canada. And now that we're also dealing with things like regular lockdowns and other sorts of restrictions, it seems quite plausible that, again, we may experience that going into this winter. But first, let's chat about me, my portfolio, and why I've been selling a lot of my properties. And so there is, in fact, actually a multitude of reasons why I've decided to sell off a lot of my properties. One, in case you guys haven't realized, there's been a changing of priorities for myself. So if you haven't noticed, we recently rebranded the Matt McKeever YouTube channel, which was really just about me talking about real estate, interviewing other real estate investors and talking about financial independence and retiring early. And now it's the Canadian real estate channel. And, that wasn't just arbitrarily chosen. It was because, hey, Matt kind of wants to go on, tackle new challenges, explore new opportunities, as well as go up and live at the Citadel, start his own society. And again, if you guys want to learn more about that stuff, you definitely need to follow me on the Matt McKeever Unfiltered YouTube channel, as well as Instagram channel. We've also got the Problems and Profits Discord. There's probably links in the video description down below, but if not, just find me on Instagram and you'll find it in my link trees there or in the bios on my different Instagram accounts. So that was definitely a factor. And when I'm thinking about, focusing on something, I really do want to focus on something. So I have a tendency and a habit of biting off more than I can chew. And it's kind of how I got to this point in my life and this point in my career. So not even knocking that as a strategy, but it is something I've came to realize that oftentimes I start more projects than I can maintain. And, I naturally want to move on to the next new project. I want to go chase that new thing. And oftentimes that means that my existing responsibilities, my existing challenges, my existing businesses, investments, they often suffer because of that, because, hey, Matt's hyped up about this new opportunity. He wants to dive deep into it and really explore it to its fullest extent. And I've only got 24 hours in the day, the same way as you guys. And probably just like you, I like to spend at least 7 or 8 hours sleeping. So there's a finite amount of time and an infinite amount of projects. And I feel like at this point in time, I've learned a lot of the things that I'm going to learn from real estate investing. I feel like I've overcame a lot of the challenges I originally set out to accomplish when it came to real estate investing. Now, by no means have I perfected it. By no means do I know everything there is to know about real estate. I have no doubt that I could spend another 5 decades learning about real estate, and there would still be more things I could learn, more nuances to different investment strategies, more relationships I could build. However, when I think about the Pareto principle, the 80-20 rule, and naturally, I feel like, hey, I probably got 80% of the lessons, 80% of the value that I'm going to get on my real estate investing journey to this point. So when I started thinking about taking on new challenges, like starting the Citadel, starting the music NFT business that I'm doing with Dan, the Lost Boy, Dan, the NFT boy these days. And again, really encourage you guys to check that out. You can find links in my different Instagram bios, as well as go follow Dan, Dan, the Lost Boy on Twitter and Instagram. These new projects, these new challenges do take a lot of my time and energy. And so naturally, I'm just being pulled in that direction. I know that my real estate portfolio will likely suffer if I or someone else that I've put into place isn't constantly focused on it. And at the same time, prices are doing pretty good in the real estate market these days. I started investing back in 2010, and now 11 years later, everything's pretty much more than doubled in regards to what you would have paid for it back in 2010. Now, that doesn't mean that inherently the properties I'm selling are bad investments for the people buying them. It's a different type of investment these days. I was originally really focused, if you guys remember all my content here, on cash flow. Cash flow is king, in my opinion. I think moving into this potentially new market dynamics that we may experience, focusing on cash flow being king is still a very wise decision, in my opinion. So let's explore, this concept of what if the market corrects? What if we end up seeing prices pull back? What if we see a massive drop? How can you prepare yourself as a real estate investor for such an event, such an occurrence? Well, first things first, as always, it really comes down to understand what your goal is as a real estate investor. I'm going to assume that your goal is to build up a portfolio, that you want to create passive income. You want to be able to quit your day job because, hey, it turns out like 90% of my followers, that's what you guys want. So we're going to operate within that framework and discuss, should you invest in the market today? Should you be waiting for a correction? And when would you know is the right time to really jump in? When will you know that it's the bottom of a correction? First things first, no one can time the market. So I think it's foolish to decide that you're just going to wait on the sidelines in any investment endeavor. Now, again, that doesn't necessarily mean you need to go blindly jump into a deal, a project, or an investment, but don't use that as an excuse to not be learning. So you can always be learning. You can always be building out your network. You can always be fine-tuning what your plans are. So regardless of whether you think real estate's going to drop by 50% tomorrow, or you think it's going to increase by 50% tomorrow or over the next decade, doesn't matter. No excuses. Start learning. There's tons of free resources. Again, we've got links in the video description down below. You can jump over to my new website, mattmckeever.com. Tons of free ebooks and e-guides in relation to real estate investing. But don't do yourself the disservice of waiting for the market to correct. If you guys are unfamiliar, Garth Turner is a regular real estate pundit, blogger. And I think since I started following him back in 2005, 2006, I want to say, he's been predicting a massive real estate correction in Canada. And now between today and back in 2006, has there been times the market's gone flat? Has there been times the market's dropped a bit? Yeah. But overall, if you were focused on fundamentals investing, you would still be better off today had you invested almost at any point in the past in real estate, again, focused on the right fundamentals, you'd be in a better position. And so, again, I meet so many people. And one of the reasons I decided I want to, in fact, do this video today is yesterday, Sunday, we ended up doing a kind of pop-up event here in London, Ontario at Victoria Park. About 40, 50 people that follow me and Mike Rosehart showed up, chat about real estate. And it was just amazing to meet a lot of these people. And one of the things that stood out to me is, hey, the people that would show up to a random kind of pop-up meetup in person these days are the same sort of people that actually just take action. They're the ones that watch the videos that myself and Mike Rosehart and other Canadian real estate influencers produce, and then they end up actually and go do shit. And it honestly breaks my heart when people come up to me and they're like, and still please do come up and tell me your life story. You don't need to filter yourself for me, but I can't help but feel like I haven't really helped someone if they come up to me and they're like, hey, I've been watching your channel for 2, 3, 4 years. I still haven't bought an investment. I've been waiting for the market to correct. I've been waiting for just the stars to align. I've been waiting to save up just a little bit more money just in case, because I want, an even bigger, contingency fund or whatever the case may be. That's not why myself, Mike, or anyone else creates this sort of content. The reason we create it is we really do want to just inspire people. We want to see people take action, get control of their financial lives. And so sitting on the sidelines is not the best way to get control of your financial life. So you're this person that maybe wants to, in 5 years, quit your day job because of real estate investing. Well, waiting a couple of years for a market correction isn't really going to put you in that much better of a position. In fact, the first property or two you buy, I've mentioned this before, but yeah, sure, let's look for good deals. Let's focus on fundamentals, but let's also kind of approach this as an education. So it's not like day one that you enroll in college, you're like, where's my job? I paid you a bunch of money. I want a job. It's like, no, actually, it's going to take a while. You're going to have to learn some things. You're going to have to go through some awkward moments. There's going to be some trials and tribulations that are involved there. And on the other side, you'll be in a better position to get that job. But we're not guaranteeing you a job day one of starting college or university or even a trade school. And we need to have a longer term perspective. We need to have more patience when entering real estate investing. It's wonderful for those of you that started investing last year or 2 years ago. If you happen to be up 25, 50% on your property and you did nothing, I mean, it's fun to make free money, but I understand that that's also not a business model. So when getting into that first property or that second property, right, when cutting your teeth as a real estate investor, we should be less obsessed about getting the perfect price or the perfect property and making sure that we're setting ourselves up for the long-term journey of being a real estate investor. So if you want to be that person that 5 years from now is able to quit their day job because of real estate investing, step one is reverse engineering. How much money do you need to make in order to quit your day job? Now, again, just to save you guys time, because we've rambled on about this before in the past, I'll just assume that you want to make $60,000 a year. So that's $5,000 a month in passive or semi-passive income from real estate investing. Excellent. Well, again, even in these competitive markets we find ourselves in, you can actually still find cash flowing rental properties. In fact, in Southwestern Ontario, you can still consistently find properties that will cash flow $100, maybe $200 a month per unit. So if we use that $100 a month and we know that we want $5,000 a month in cash flow, well, that means we're going to need to build a portfolio of 50 units. Now, in these hot markets, can you just find any property on the MLS and cash flow $100 a month? Absolutely not. You are going to have to look for good deals. You're probably going to have to sign up on some wholesaler email lists. Again, we've got lots of videos explaining what wholesaling is. Encourage you guys to go watch those free videos. You may even decide that you want to do your own marketing campaigns. Maybe you'll do your own flyer campaigns. But let's focus on those fundamentals. So if you can find a property today that can meet your criteria, your matrix for investing, it will likely make sense to want to pull the trigger on that. And understand, if you're getting $100 a month in cash flow today and tomorrow the price drops on that property by 10%, well, that's not ideal. But hey, we got into this for the long run of real estate investing. And so the bigger question, the bigger challenge I'd put forward to a lot of investors that are too scared to jump into investing right now because prices feel too high. Again, I'm not saying that they aren't too high. It definitely, we've seen a huge run up in appreciation, unlike anything else that we've really experienced before. And so again, these are unusual times, but let's look at the facts on the ground. What's the actual vacancy rate like in the market you're looking to invest in? What's the actual unemployment rate like in the market you're looking to invest in? As well, one of the metrics that I've loved to explore with you guys in the past, and I feel like it's been a while, so it's likely due for us to check in on this, is the idea of, what's the affordability in your market? So right now we've got another liberal minority government in place. Last time they were talking about policies, they said that they weren't going to implement a UBI. However, we've got a lot of different exotic unemployments and or employment insurance and things of that nature. And it doesn't seem like too far of a stretch of the imagination that in the future we may see some sort of UBI rolled out. And while we know that like any sort of UBI is probably going to be benchmarked upon minimum wage, right? If UBI is designed to essentially give people the minimum survivable amount of money, well, presumably that's also going to kind of be based upon what minimum wage is. And so while we could potentially see massive pullbacks in real estate prices, again, doesn't seem impossible by any stretch of the imagination, will we see an equivalent massive pullback in wages, right? In earning potential, in the affordability of the average person? Well, one thing I can tell you that I don't think any politician will ever get voted in on is pushing for a lower minimum wage, or pushing for no minimum wage, or pushing to remove any sort of subsidies or payments or benefits that people that are in distress or that need to use social services. It's not going to be a popular platform that's going to get you voted in. And so I suspect in markets like Ontario, where I forget, are we at a $15 minimum wage now, or are we working towards it? I know that they had like a couple-year plan to implement it. Those of you that are more up to date on that stuff, let me know in the comment section. But hey, if we're at that $15 or we're about to hit that $15 level soon, I can tell you that I doubt any politician will ever try and pull back the $15 minimum wage. And so while you may experience a property drop in value, let's say 10, 20% even, that's not going to feel good. It's definitely going to feel like the bad part of a roller coaster. However, is it going to impact your rents? Is it going to impact the underlying fundamentals that you chose to invest in? And so right now in most markets, you're looking at like a vacancy rate well under 5%, right? And most Southwestern Ontario markets, even with kind of the unusualness that we find ourselves in regards to everything going on with lockdowns and restrictions and things of that nature. Again, last time I looked, most provinces in Canada have less than a 10% unemployment rate. So again, as we start to look at these different factors, I think it's easier to gain a little bit of confidence in regards to your fundamental investment strategy. Now, if you're just focused on the greater fool investment strategy, as in I'm going to buy something and hope someone pays me more for it tomorrow, that's pretty much my NFT investing strategy, by the way. But if you're looking at doing that with real estate investing, then yeah, I understand the reason that you're probably cautious approaching this market. Because, hey, we've seen a 20, 30% run up over the last year in a lot of real estate markets. Does it seem unfathomable that those wins, those gains could be pulled back? No, it doesn't seem unfathomable to me. In fact, it seems possible. However, rent prices, do you think that you're going to see rent prices dramatically decrease if the affordability stays roughly the same for the average person, right? And again, even if they lose their jobs, will the average person on government subsidies, on a UBI, on employment insurance be able to afford your rental property? And this is something I regularly explore with people, often with in-person questions. When someone asks me, should I invest in Toronto or should I invest in Chatham, Ontario? I'm like, well, it depends on what you want. But let's explore this through the lens of affordability. What's the minimum wage in Toronto? $15 an hour. What's the minimum wage in Chatham? $15 an hour. Well, those same people, or those two different individuals living in two different cities, they essentially have the same affordability. If you look at what Stats Canada and other aggregators of information and surveyors show us, it seems like the average Canadian spends about 30, 40%, sometimes even a little bit higher than 40% on average of their income on shelter. So if you're making $15 an hour, the average person over the course of a year is expected to work like about 2,000 hours to be a full-time employee. That's about $30,000 a year in total income. Now, if they're spending 30% of their income on shelter, well, that means we're going to end up with about $10,000 in money that they can allocate towards shelter, right? Towards rent. Okay, well, $10,000, that's about $800 a month. So essentially, we know one individual can afford about $800 a month. Or if you're looking towards a UBI program, let's say maybe it's $2,000 a month, right? Maybe they're going to base it off of something like what we've experienced in the past with CERB, or I forget, they changed the acronym, right? I don't really stay up to date on that stuff. But let's say that it's $2,000 a month. Okay, well, again, what's 30% of that? $600 a month. So if I'm looking to buy a rental property in Chatham, Ontario, and let's say it's a 2-bedroom, it's made up of 2-bedroom units, and I know that, hey, the average person can afford $600 a month. Well, if there's 2 people living in that 2-bedroom unit, presumably $1,200 is going to kind of be where affordability lands, all other things being equal. Well, that same apartment in Toronto, if it's a 2-bedroom, there's a good chance that it's not renting out for $1,200. It might be renting out for $2,400, or maybe it's higher. I don't really pay attention to Toronto rent prices. You guys can let me know in the comments, but let's run with that. Let's say it is $2,400 a month, and let's say it's $1,200 a month in Chatham. Well, again, maybe Toronto appreciates more. Maybe Chatham has a pullback sooner. However, if I'm focused on cash flow, if I'm focused on the fundamentals, and the vacancy rates are low in Chatham right now, I don't see necessarily a reason to want to panic as an investor. I don't see a reason why I wouldn't be willing to jump into that market. But again, the reason that I would have that confidence is because, one, I focus on what's my end goal. Oh, 5 years from now, I want to be able to quit my day job and make $5,000 a month. This is where having that patience is so important. And once you kind of set that goal, you shouldn't just deviate for any reason. And oftentimes I see people fall victim to shiny object syndrome, right? Or they've got that analysis paralysis, right? Those are the two biggest issues I see real estate investors have. Sometimes they get caught in analysis paralysis because they're like, I'm trying to time the market. I'm waiting for properties to drop in price. And sometimes they fall victim to shiny object syndrome because they're like, hey, I just saw this other guy and he's making tons of money buying pre-construction condos and flipping them and assigning them and making tons of money. Well, hey, you can make money in that strategy. It turns out you can make money with just about any real estate strategy or in just about any real estate market. The only real restriction here is you can't always make money in any market with any strategy. There's certain strategies that are going to be better suited to certain markets, and there's definitely going to be certain strategies that are better suited to different investors. And what's the suitability, or what's the most suitable strategy for you as an investor? It's really going to come down to what your goals are. So kind of to recap this, what I really want you guys, and then I'll jump into the comment section. So again, hit me up in the comments if you've got any questions, more than happy to answer them. But in summary, Matt's deciding to divest from a lot of his real estate investing for a variety of reasons. But the primary driver is me knowing what's important to me and what I'm focused on. I'm not going to be focused on my Southwestern Ontario real estate portfolio in the near future. So it doesn't make sense to want to distract me or my team and our energy towards that sort of endeavor. At the same time, if you're just starting your real estate investing journey and you understand what your goal is, it could make a lot of sense to want to jump into the real estate market right now. So again, just because Matt may not be doing something doesn't mean you immediately need to panic and not do that thing as well. But it's really going to come down to you understanding what your goal is. Maybe your goal isn't to quit your job in 5 years. Maybe all you want to do is have $100,000 today so you can pay for that dream wedding, that dream vacation that they may or may not let you out of the country for. Or maybe you're looking to buy that dream car. I don't think I would ever need to spend $100,000 on a car, but that's kind of tangential there. So if you're looking to make that lump sum $100,000, well, there's a good chance that wholesaling, flipping real estate, or maybe even speculating could make more sense for you. Now, you're never really going to hear me cheering for speculation in real estate because the reason I choose to invest in real estate is because it gives me control. So the reason that I don't just go out and buy a REIT, like shares in a REIT or units in a REIT, is simply because I understand that I want to be able to generate alpha, right? I want to create a better return than what the market can currently achieve. And the only way I'm going to do that is through, having a competitive advantage, being willing to outwork my competition. That's pretty much always my competitive advantage, and position myself well. And so again, if you're looking for alpha, if you're seeking alpha, if your goal is to produce better returns than what just the average stock, the average REIT unit can provide, understand that you're going to have to go above and beyond average. Now, again, it's not that hard, actually. We can circle back to the 80-20 principle. Turns out probably 80% of the profits in real estate are made by 20% of the actors. And, 80% of the losses are probably also taken on by 20% of the actors in real estate investing. And it's important for us to keep that always top of mind because, you don't want to be just comparing yourself against the benchmark or the average person. You want to be comparing yourself against the goal you're setting out for yourself. So if my goal was to make $5,000 a month in passive or semi-passive cash flow from real estate investing, well, the first thing I should really be asking myself when I'm looking at a deal is this getting me one step closer towards my goal? If the answer is yes, then I should seriously consider it. If the answer is no, if it turns out that this property is going to be negative $100 a month in cash flow, and I don't have a very clear plan or path in the near future to change or rearrange things, well, then why would I be buying it? It doesn't make any sense whatsoever. And again, far too often I find people just wanting to jump on. My cousin just made $10,000 flipping a pre-assignment contract in Toronto. Cool. Well, as long as that was part of your cousin's business model, that sounds like a good plan to me. And I'm glad that it worked out for them. But if it's not part of your business model, we shouldn't just go deviating and jumping into another strategy. The same way, those of you that are following along with me in my Unfiltered channel, just because I'm dabbling with NFTs doesn't mean you need to blindly jump in and please don't throw your entire net worth into NFTs. Again, you do whatever you want, but do your own due diligence here, people. And I really encourage those of you at home that have been sitting on the sidelines wanting to get into real estate for the last couple of years, stop using high prices as an excuse to not take action, right? It's important that you come to this inflection point. Do I actually want to be a real estate investor? If so, I need to start making offers, right? It's that simple. Back in 2020, in the pre-COVID era, I essentially was focused on make more offers, get more deals, make more money. Seemed like a very simple strategy in my mind, and yet so many people struggle to ever take action upon that strategy simply because they get themselves caught up in their headspace, right? They psych themselves out. They're trying to time the market perfectly. Hey, if I can't time the market perfectly, what makes you think you're going to time it perfectly? And if all the other successful real estate investors I know can't time the market perfectly, what on earth makes you think that you're going to beat us in aggregate? You're not. And so again, this is where let's start approaching real estate investing a little bit more like the game of golf, where you're playing against yourself or you're playing towards your overall goal, rather than necessarily just constantly rubbernecking, trying to chase what other people are doing. It doesn't serve you any good. And in fact, it ends up just being an excuse you use to hold yourself back. Appreciate people jumping in the comment section. So going to answer a few of those questions. And then again, if you guys got any more, hit me up. Otherwise, we'll wrap it up once we go through the questions. Wait, I got it. Sell now. Wait until land is cheap. But then, I assume you mean buy then, interstellar dweller. And yeah, that's pretty much the exact opposite of what I was preaching here. So I think you got it backwards there, but I appreciate the comment nonetheless. What's up, Hungarian Experiment? Alfred Wong, what are your thoughts on Justin Trudeau's proposal for the tax-free first-time home buying investment account? Yeah, good question, Alfred. So first things first, other than for some edge case scenarios, this isn't really going to make a big difference for the average person. Now, if you were looking to buy in the next year or two, before the market necessarily fully adapts to any sort of new rules, regulations, or opportunities that are implemented through policy changes, unless you're in that small cohort, I understand the market's going to adapt to it, right? So if all of a sudden everyone's able to tap into $25,000, $50,000 in their TFSA in order to go buy their first property, well, every other first-time buyer is going to also start doing that. And all of a sudden, that little competitive advantage that it felt like you had probably erodes really quickly. The market adapts, quite quickly to these changes in policies, right? Like look at whenever, interest rates change, look at whenever they change the stress test. Sure, there's often a momentary blip, but all other things being equal, we seem to return to the mean on whatever sort of trajectory we already were at that point in time. The same thing holds true for a lot of the other proposed policies. Again, this isn't even just me attacking the liberals, although I'm more than happy to do that. But it goes for every single policy I saw pretty much promoted by every single party. The PPC did have a slightly different approach to it. And in theory, if they were crazy enough to pull off some of their propositions, that might have had a bigger lasting impact. But it would have actually probably brought a lot of volatility into the market, which I think in general would have been very unpopular with the average Canadian, because it turns out we'll give up almost anything and everything for safety in Canada. Let's leave it at that. Tommy Gunn said, hey man, I've been excited to see you go live again. I'm having a hard time figuring out how to break the ceiling from renting to buying. I've been renting for 10 plus years. Appreciate the question. Appreciate that you're enjoying the live stream. So step one is, are we saving any capital? So if essentially your net worth isn't growing every single month, and if you're not able to spend less than you make, you're always going to be on this rat race treadmill, right? It's going to be very difficult for you ever to see the horizon, because you're always, whenever something goes wrong, when something unexpected happens, you're not going to have that reserve fund. You're not going to have that contingency fund. You're not going to have that like sleep at night buffer, right? So first things first, make sure that you're actually spending less than what you're currently making. Once we've got ourselves in a good position there, again, I would strongly encourage, in fact, I will challenge most of you that are struggling right now to get into real estate investing. Find a way, force yourself into constraints where you're saving 50% of your income. because it's that important. I don't know how else to tell you to get ahead when it comes to saving money. Again, if you can earn more, that's great. But make sure that if you earn more, you don't naturally start spending more. For me, the first, I don't know, probably at least probably close to the first decade of my like professional career, I was at least saving 50% of my income. Now, I don't really track it so much per se, and I've never been someone that needs a ton of wealth. So like I'm at a pretty comfortable spot. I like what's going on now with me. But certainly when you're in that grind phase, when you're first accumulating assets, the higher your save ratio, just it's going to set you on a completely different trajectory from a saving standpoint. But it also is really a complete mental shift. And that's honestly more important than any of the assets you accumulate. Once you understand that your expenses are almost always at your discretion outside of maybe extreme medical expenses, your shelter can cost as much or as little as you want. I won't name names here, but one of the coaching students I've had in the past that was an aspiring real estate investor and now is a very successful real estate investor. There was a phase in his life where he was sleeping in the park, like literally sleeping in public parks. And that would have been in the last decade, like within the last 10 years, he was doing that. And now just the other day, he was telling me about the millions of dollars in equity he created just over the last year and a half. So understand that where there's a will, there's a way. But for a lot of us, we truly don't prioritize it that much. And so if you want to save more than the average Canadian, understand you're going to have to live differently than the average Canadian. And there's nothing wrong with that, in my opinion. In fact, I think it's one of the things that kind of helped me break out of the rat race and the matrix or whatever you want to call it that's going on right now. And I'd really encourage those of you to do it. It's going to give you a really strong internal locus of control once you start getting control of your personal expenses. Now, moving on from that, once we've got ourselves in a net accretive position month to month from a financial net worth standpoint, the next thing is going to be, depending upon your predisposition, depending upon your goals as an investor and what you're looking to actually buy from a real estate investing perspective, or if it's a personal residence you're looking for, be honest with yourself. So do a personal inventory. How much money do I have? At my current, 30, 40, 50% plus savings rate, how long will it take me to save up a down payment for the property or the type of investment I want? And make sure that that investment or that property you're chasing actually fits within a bigger plan. It's not just the plan of getting your first deal. Now, it doesn't mean that you need to have a well-orchestrated, 1,001 step plan, but we do need to make sure that we understand the broad strokes of what direction we're heading in. Oftentimes, when talking about big goals, I don't like to set a very specific destination, but more focus on it like a guiding North Star, right? As in, okay, I'm headed in this direction. Maybe it's a little bit that way. Maybe it's a little bit this way. But at least I know in general that I'm making progress because I'm headed in the right direction. So once you've done that, do that personal inventory. And hey, if I'm in a position where there's an acceptable timeline where I can save up that down payment, that deposit, cool, do that. For a lot of people, maybe that's not practical. Maybe you literally, even if you're saving 50% every month, maybe that works out to just a couple $100. Maybe that works out to just $1,000 a month. And it's still going to be a real struggle to save up the down payment. Well, then at that point in time, you're going to have to decide, are you going to get good at attracting other people's money, right? Other people's resources. And that may look like, just hard money borrowing. Like, hey, I'm going to work really hard, give this young kid or this old kid a chance. And, here's the sort of return. Here's the opportunity I'm presenting you with. Or maybe you look towards finding JV partners. And this was something that I was chatting with a couple of young guys that came out to the meetup yesterday. They had just graduated high school. I think most of them were kind of taking a gap year, or they weren't sure if they wanted to go post-secondary education. I can totally get that these days. And they were asking, like, how can I get started? How can I start learning things? How can I make connections? And first thing is start going to networking events, right? So start surrounding yourself with like-minded individuals, whether it's virtually or in person. If you can do a combination of both, I think that that's ideal. But then once you start making connections and start building relationships there, try and find ways to provide value to successful people that are doing what you want to do. So that may look like offering to be their chauffeur. That may look like just being a sounding board for them. Maybe you're just going to help them at a job site by sweeping the floor or doing some menial tasks or labor for them. Or maybe you're going to get good at lead generation. So while, check your local health authority and door knocking was always one of my favorite ways to generate leads. And what that looked like, at least in the pre-COVID era, was literally going to a neighborhood that you wanted to invest in and knocking on every door, introducing yourself, starting a relationship, find out if anyone's thinking about selling or if anyone's in an unusual situation. And maybe there's a way I can come up creatively to solve that for them. And again, if you start getting good at this, if you actually start building relationships, if you actually start getting comfortable talking to strangers and asking weird questions and talking about real estate all the time, weird opportunities will find their way to you. And most new investors or aspiring investors fail to understand that the opportunity is by far the hardest part about real estate investing. Being able to, one, find that opportunity, but then truly recognize it too. So what's the best, highest, most efficient use of it? Is there an opportunity to actually make money, right? That's where most success drives from for the average real estate investor. So in most businesses, you'll hear, the idea is easy, right? It's the execution that's hard. That's still true in real estate, but actually having the idea by finding the property and knowing what the best use of it is, that's an extremely valuable skill set to have. If you start off by being someone's bird dog or wholesaler, you will cut your teeth. You will sharpen your skill set towards being able to consistently find interesting, unique opportunities. Even if it takes a year or two of getting good at finding those opportunities, once you do that, you'll be able to track all sorts of money partners, especially if you've also been taking the first piece of advice, which was going out to networking events, building relationships, making friends. And you may be like, hey, this all sounds theoretically good, Matt, but I have no, gosh darn idea what a good opportunity looks like. Well, hey, if you're going to those networking events, ask every investor there, what's a good deal look like to you? So, hey, what's your investment strategy? Oh, you're a flipper? Cool. Like, how many deals are you doing a year? Oh, man, that's so crazy. That's awesome. What would a good deal look like in today's market for you? If you found a property that was like completely just dilapidated, but it was $150,000 in London, would that still work? Man, yeah, if it was still standing, we could make that work. Or maybe they're like, no, it would really depend upon the condition. Again, there's a lot of insights you can learn from just chatting with other people that are engaged and excited about the same subject matter. So I know for a handful of people yesterday, the in-person networking event we had here in London, Ontario, was their first time coming out to a networking event. It was their first time meeting other real estate investors IRL. And I had more than one person come up to me and be like, wow, I had no idea people would just share so much. I had no idea people would just tell me all their war stories, share with me all their different perspectives when it comes to real estate investing. And it turns out for most real estate investors, you get us talking about real estate and you won't be able to shut us up. And yet, if you're actually paying attention to those conversations and you're asking interesting and thoughtful and thought-provoking questions, you'll actually find yourself gaining a lot of information. You can literally gain years of wisdom and experience through a handful of conversations. I mean, for those of you that found me because of the Casey Wong videos, look at those conversations alone. I think that there's years of experience right there that Casey shares with us over the course of a couple of hours. Hell, the last 5 years have just been me trying to share and distill all the lessons I've learned, all the perspectives I've gained when it comes to real estate investing. So don't be afraid to ask questions. Don't be afraid to reach out. But one of the mistakes I see people do is like, they only want to reach out to, wildly successful investors. So they're like, I'm only going DM Graham Stephan. I mean, you can, but the odds of you getting his attention is a lot lower than you going to your local networking event and talking to even 10 investors there and just trying to pick the best 2 or 3 that you met and trying to build a relationship with them. Again, make sure it's a two-way relationship. Don't always just be taken. Don't always just be asking questions. Find ways that you may be able to provide value to them. And it may come in unusual circumstances or perspectives, right? Maybe you'll have the conversation with one real estate investor and you'll find out they love collecting old Coca-Cola signs. Was there a way you could hunt down an old Coca-Cola sign on Kijiji or Facebook Marketplace and be able to present them with this gift of gratitude, right? Like, hey, man, I know you've got that cool collection. No idea if you've got the sign already, but just wanted to show you, like, I was blown away by your willingness to jump on that call with me, by meeting up with me, by showing me around your property, whatever the case may be. So I think the real key here, Tommy, is focus on, improving your day-to-day financial situation, right? So get control of your savings rate. Then secondly, really start building relationships. And I just really want to encourage everyone to do that regardless of the state you're in on your real estate investing journey. So even if you've been doing this for 5 years, but you've been going the lone wolf route and you recently just kind of discovered that, hey, there's people out here talking about real estate, start interacting with them. I've met so many investors that for the first 5-10 years of their investing journey, they were just in an echo chamber alone by themselves. And then they stumbled into an opportunity to be part of a community. And almost, I can't think of a single situation where their trajectory didn't improve, where their results didn't improve, because they started surrounding themselves with like-minded individuals. So yeah, really encourage you guys to do that. What else do we got going on here? Elizabeth asked, do you think private lending is still a relatively safe option for investing? So obviously, when we're talking about the word safe, it really is relative. If we're doing private lending and it's secured, so there's like a notice on title, right, or a mortgage, then you're at least backed by that real asset, right? So if things go wrong, you can, in theory, foreclose or take possession of that property if worse comes to worse. Now, again, even when we're talking about private lending, though, are you in the first place mortgage, second place mortgage, third place mortgage? Each one of those obviously has a different risk reward ratio normally when we're thinking about private lending. So first place mortgage, probably the most secure, safe option for private lending, right? Third place mortgage, definitely less secure than a first place. But that third place mortgage, a lot more secure than an unsecured promissory note, right? And so just make sure that you understand what you're getting into. Because I see a lot of investors thinking, like a lot of private money lenders, thinking that they're about to get a mortgage, right? That they're investing and they're secured by the property. And then they're actually presented with a promissory note by the would-be borrower, right? By the real estate investor. Well, if that's not what you signed up for, there's a good chance that that's going to be offside in regards to your risk-reward tolerance. So definitely a personal decision there. But I think if there's enough equity in the property, if you're secured by the underlying asset, it's probably a relatively safe option for investing. Again, depending upon what your criteria are. I don't even know what that means. Jeremy, I don't know what a matter daddy is. If I hadn't seen you around the channel before, I'd assume that you were trolling me, but I'm going to go Google what a matter daddy is. Where's your matter daddy? Did you bring your matter daddy? Ooh, all right, I'm on Urban Dictionary, and I still don't actually understand what it is. Yeah, I literally don't even know what we're talking about there. So you'll have to extrapolate that for me or give me some more context. I don't want to be behind on slang, but yeah, I have no idea what that means. Awesome. Love it, Teresa or Tessa. Glad that you accepted the challenge. Latisse, I don't make much money. I don't have money to invest, and I don't know where to start. All right. Well, if you don't see a very clear path to be able to, start making a lot more money between being able to build up a war chest for investing or anything like that, then I wouldn't stress that. I would literally focus on developing a skill set that's very valuable in real estate investing. Because again, if you start getting good at finding deals, and finding deals to me is getting good at dealing with people. So like literally having conversations with people. One of the first things I used to try and teach all my wholesalers that work for my wholesaling business is always be talking about real estate. Every single person, especially in like real estate obsessed Canada, knows someone that owns real estate. So rather than talking to the waitress or the bartender and trying to get their phone number, why not try and get their landlord's phone number? And while that may sound like a little bit of an extreme example, understand that everyone either owns real estate or rents real estate or lives with someone that owns real estate or rents real estate. So you're almost always 1-2 degrees of separation at most from a real estate opportunity when you're interacting with another human being. Now, sometimes it takes a little bit of time to really have that mental shift. But if you can actually start understanding that and start just naturally curving a lot of your conversations into real estate investing, one, you're going to learn a lot. You're going to make some new interesting friends. But even more importantly, you're actually going to start stumbling into cool opportunities where someone's going to be like, yeah, sure, I'll give you my landlord's number. Like, he's an asshole. I hate him. Da, da, da. And again, that actually is a problem that we can turn into a profit potentially. A lot of my best deals I've bought off of slumlords, and a handful of them I literally got through tenant referrals, talking to my existing tenants. So again, if you've got friends that rent, find out who their landlord is. Find out other friends, like who's got the worst living situation, who hates their landlord. There's likely a good opportunity there. And again, you may not be in the financial position to execute on it, but if you can start regularly getting in front of these opportunities, and you're also out there networking, making friends in the real estate investing world, very quickly you're going to realize like, hey, I can actually start connecting these people. And when I connect them, there's a massive opportunity, either for me to get paid or for me to actually start getting a percentage of the deal. So this is something that, I've heard just about any and every real estate, successful real estate investor say, if the deal's good enough, I'll buy it. And so if you start getting good enough deals regularly, there's ways for you either to cut yourself into the pie or for you to at least get compensated and maybe build up the war chest so you can eventually go buy or invest in your own real estate deals. Is there any analysis on the Calgary market? Yeah, so we do a monthly video update on the Calgary market. So I'd encourage you, just Google Matt McKeever in Calgary and you'll find it. We've got our local Calgary condo expert who comes on the channel once a month and breaks things down for us. I've been on an extensive flip and move in Markham. However, I've not executed a full BRRRR strategy yet. For my first BRRRR, would it be feasible for me to buy a triplex instead of a single family home? Yeah, it seems feasible to me. And again, at the same time, if you're loving the flip and move strategy, don't be afraid to use that either. Now, if you're talking about doing a BRRRR where you're going to live in the property, right, and maybe you're doing like insured mortgages or low down payments, just be aware that CMHC fee, you're still going to have to essentially pay for it on the front end, right? It gets amortized into your mortgage. When you go to refinance, that's going to cut into the amount of capital that gets redistributed to you on the refinance. But if that's your goal, yeah, there's no issues with that. Russell, which province will grow the fastest? Well, that's honestly going to come down to, which province has the most promising fundamentals. So which one's got and I assume when we talk about fastest, you mean like price appreciation or rent appreciation. It's going to come down to what's the vacancy rates, right? What's the employment rate? What's the average income? All those are really important factors when trying to understand what's going on in the market. Here in Canada, immigration is a huge population driver, right? So again, looking at Stats Canada, they've got projections out through, is it 2040 or 2045? I forget where it lands, but essentially for the next 2 decades, you can see what the country of Canada plans to do in regards to immigration. Now, again, COVID kind of threw a wrench in that. There's even more proposed immigration on the horizon. I believe, is it this year or next year? It's like 400,000 immigrants. That's a huge driver in a country of 30 million and change, 35 million is it that we're at now. So understand that all those macroeconomic influences really do impact individual provinces. All right. Well, I appreciate everyone hanging out with me, jumping in the comments, asking your questions. Smash that like button if you got value from today. And again, remember, you're in control of your financial journey. If you want to put yourself in a better position tomorrow financially, it's going to result, or you're going to need to do some executing today, right? Like if you want the results tomorrow, you need to put in the work today. And far too often I find people just waiting or hoping that the market's going to present them with the perfect deal, that tomorrow properties will drop in half and rent prices will stay the same. Maybe it happens, but it doesn't feel that likely. And so what I'd really focus on is what are you in control of? Right? You're not in control of the macroeconomic environment. You're just not. You're not in control of interest rate or policies. Now, that doesn't mean that we should be completely blind to them, right? We shouldn't be completely ignorant of them. However, only dwelling on those factors that you can't control doesn't seem like you're really going to put yourself in a better position financially tomorrow if all you're dwelling on is things you can't control today. Things we can control, your savings rate, your level of education, the size of your real estate investing network. Boom. All those are under your control, as well as trying to put in efforts on things that are going to end up being accretive. So if you've got no money and you don't see a clear path to making a lot of money to be able to invest in real estate in the near future, then let's focus on getting really good at finding opportunities. And if you don't know what an opportunity is, well, let's go and ask a bunch of successful real estate investors in your neck of the woods, what is a successful opportunity, right? Like, at what price would you buy this house? And maybe it turns out the seller wants 500,000 and the investor tells you 350 is the price that they want to buy it at. That's still a good data point, even if it turns out that that $500,000 property isn't a good deal. There's a lot that you can learn from that. And again, just asking these questions, like far too often, I find people don't want to go to a networking event. They don't want to talk to investors until they're successful. I can tell you that's the slowest way to success. If you're willing to have the awkward conversations, if you're willing to embarrass yourself, maybe expose your ego a little bit, you'll actually find that most people are more than willing to help you, especially when you're willing to help yourself by actually making the first move, by asking the first couple of questions, by starting the awkward conversation today. Because the more conversations you have today, the less awkward they're going to be tomorrow. So appreciate you guys watching. Smash the like button. If you guys aren't following the Matt McKeever Unfiltered and you would like more Matt McKeever, especially less real estate Matt McKeever, jump over, follow me on YouTube and Instagram. I'll be going live at 7:20 tonight, and we're going to be talking about gratitude, and I'll maybe tell you guys a little bit more about what's going on at the Citadel. All right, I'll see you guys in the next video. Thanks, guys.